Let's bring you the very latest in the world of business. The local bourse, which jumped almost 3% yesterday, is expected to trade firmer, with markets digesting news that tech giant Apple is pruning growth plans due to deteriorating global economic outlook. Thabiso Mamathuba, investment analyst at FNB, joins us now for an analysis on the latest market moves. A very good morning to you, Thabiso. Thank you for your time. Give us a sense of how the markets opened in early trade and what factors are driving sentiments this morning.
Good morning. So, in terms of the GSE, we're seeing a very cautious start to the trading session today. Obviously with the rand remaining weaker against major currencies, this obviously comes as investors sort of wait on the sidelines ahead of crucial economic data in the form of CPI later this week, as well as an interest rate decision by the South African Reserve Bank later this week. We're seeing broad losses across all sectors at a mixed trading session out of the Asia Pacific region this morning, with Chinese markets still sort of wary on potential lockdowns as concerns over the coronavirus infection in various Chinese regions persist. So we saw stocks in the US last night closing in negative territory. This was obviously despite a positive trading session earlier in the day, obviously as a couple of solid earnings releases on Wall Street were sort of overshadowed by a weak announcement from tech giant Apple, which basically stated that, they will slow down employment spending going forward. So we saw all major indices sort of closing in the red as a result.
Now, oil prices on the other end look to be running out of steam today after gaining more than $5 a barrel in the previous session. Perhaps help us make sense of these developments.
Yeah, so we're seeing oil prices pausing the rally we saw yesterday, this after posting the biggest one-day advance since May. So this comes as fears of a tightening market, which rattled investors. So the surge in prices yesterday came after Saudi Arabia, which is, one of the largest oil producers. They basically refused to commit to increases in oil output, while obviously disruptions along the Keystone pipeline in the U.S. Reduced shipments of oil from Canada to the U.S. So obviously there's now added fuel to supply concerns that were already doing the rounds. But we've seen in recent weeks that oil prices have been quite volatile as market participants, assess the impact of a looming recession and what it could basically mean for global oil demand.
And shares of struggling construction group Stefanati stocks surged to their highest in more than 3 years after the company reported progress in the disposal of its 49% interest in Altair stocks. What's happening in that space?
Yeah, so the construction group finally completed the disposal of this 49% stake in ATS, which is basically a building and interior contracting company based in the UAE. So this announcement was, mostly cheered by the market, with the share price advancing on the day. We know that the company has been in talks with its lenders for quite a while now, and there has been a delay in selling some of its assets as part of the restructuring plan. And therefore, this progress made on the disposal of, the stake in ATS will definitely accelerate this restructure. And, we saw earlier in May that the company reported a loss at their full year results. This comes obviously as operations were adversely impacted by market conditions. However, the company did manage to, reduce their debt on the balance sheet. But, for a company in this position, we can only hope that government's commitment to infrastructure investment could be a potential catalyst, not only for Stefanati stocks, but for the industry locally, although obviously execution risk remains a bit of an impediment.
And Old Mutual says it will not follow Standard Bank's lead in reinstating staff and fired for refusing to comply with the mandatory COVID-19 vaccination policy. That's despite demands by SASBO. What do these developments speak to?
Yeah, so, Old Mutual has been, making headlines recently, but, in this latest development, they basically just stated that, they will not be reinstating, the staff that they dismissed for not complying with its mandatory COVID-19 vaccine policy, even though the company did do away with the workplace safety rule sometime in June. The company remains firm on its decision, despite the demands made by the union SASBO, which currently represents about 73,000 members in the financial services sector. So it would be very interesting to see, where this basically ends up. We saw that Standard Bank, did sort of make a U-turn on its decision to dismiss staff for not complying with the COVID-19 vaccine policy. However, like I said, it remains to be seen what decision Old Mutual actually ends up making in this case.
Absolutely. Thank you so much for your time and thorough analysis. Thabiso Mamathuba, investment analyst at FNB, helping us make sense of the latest in the world of business.